so much again, sir. As always, it is another exciting topic, another webinar here from the United States Senate Federal Credit Union. As Eddie stated, my name is Milton, and I'm the Membership Development Officer here at the Credit Union. And we are delighted to be coming to you again on another, again, as I stated, exciting weekly Wednesday webinar. Today's topic, as Eddie alluded to, is going to be unlocking the potential USSFCU home equity and lending solutions. And one of the things that also Eddie mentioned is that we don't have one, but two presenters for today's presentation. So that is definitely exciting. As always, we love to make this engaging. So if at any point you have any questions, feel free to submit your questions through the chat feature or the Q&A. And it is our commitment. I know Andrea said it with a lot of energy, and that is that we will answer every question before we let you go this evening. So I know Elton told me that he's got plenty of time today, so he's ready to stay here until midnight if needed to answer every question. So we will do just that. So again, I thank you all for making time. Again, this is a great topic in my opinion. As Eddie also mentioned, the weather is changing. The leaves are going to start changing colors. What that means is that fall season it's here, the holidays, and if you're like me, you did something over the summer and now you want to do some upgrades to your house. Maybe you're planning on hosting for the holidays and you want to upgrade your kitchen and you don't know where to where to pull money from, and you're not taking advantage of the equity that you built in the house. Perhaps this might be a great idea. So and another thing that I also like to mention is the fact that as everyone is aware, the rates are starting to come down a little bit. I do know the Feds are still waiting for them to have the meeting, and everyone again is anticipating the rate cut to be announced very soon. So again, a lot of things are lining up, and everything hopefully will fall in place. And then that's one of the reasons why you're joining us here this evening. So with that being said, let me go ahead and introduce the panel, the expert panel that we have this evening. And you see a lot of familiar faces. Obviously, you might see some new ones without any particular order. You already know him. He's the face of the credit union, Eddie Villanueva, with the marketing department. Eddie is actually going to be assisting Andrea, also from the marketing department. So if anyone has any questions at any point, feel free to submit your questions through the chat and the Q&A function. Also, from the marketing department, we have our very own, the creator of all the content that you see, or queen of content, as Eddie likes to call her, Carrie Lazar. She is responsible for all the graphics that you see. Everything, it looks so beautiful, so wonderful. And most important, everything, all the content that you're seeing here is organic and something that we, put together. Well, not we, Carrie puts together for all of us, to share with all of our wonderful members. So again, thank you, Carrie. And now let me move on to the to the main panel, our experts. We have Sharon McDonald. She is from the Home Equity Department. She is actually our Home Equity Manager. She will be supporting the two main presenters today. And without any particular order, we have Elton Roshi, who is our Consumer Lending Manager. He will be leading the presentation, along with his partner, Kelly Pasilio, who is the Director of Real Estate Lending. And with that being said, I hope you guys enjoy this webinar. Elton, I already spoke a lot. I promised that I wasn't going to talk too much, but let me pass it on to you, sir. Thank you.
Thank you so much. Good afternoon, everybody. Thank you for taking the time to join with us during this important topic. So we're going to be talking about unlocking the potential for your home equity and the lending solution. So we're going to be talking about home equity first, and then the practical uses of it. And then we're going to be delving deeper into our additional consumer loan solutions that are available to you as our members. And then from there, then we're going to have a Q&A. So Kelly's going to be talking about the home equity options first, and then I'm going to move over once she's completed her part to go over the consumer loan options for you guys.
Hi, thank you for the introduction and thank you, marketing, for creating this presentation and the slides. As Elton just said, I am going to go over our home equity products, and then Elton will go over our unsecured lending products. So, we have a lot of options. First of all, what is home equity? Well, home equity is the difference between the market value of your home and the amount you still owe on your mortgage. We go up to 90% loan to value up to 400,000, and 80% up to 500,000. Next slide. Building home equity. Okay, so there are ways to build equity. Mortgage payments, of course. In the very beginning, sometimes it takes a while, but a little bit in most instances, except for regular mortgage payment on a first, your balance goes down. Then there's also appreciation. There's a lot of that going on for the last several years. Houses, prices are going up. There have been instances in the past, when we had the Great Recession, where they went down, but now they're, we don't see any indication right now of them going down, but you just, a lot of things are involved in that. Down payment, when you put that's part of your equity when you put a down payment on the house. And then home improvements. Some home improvements will increase the value of your home. Not all, but some. And we'll get into a little bit of that in some of these slides. Okay, next slide. A home equity loan allows you to borrow money using the equity in your home as collateral. So essentially, one of the reasons people go the home equity route is usually the rates are lower than a conventional unsecured loan. Not in every instance, but in some. You can usually borrow more money when you're using your home as collateral. There's also a longer term, and in some instances, there are some tax advantages. Next line. Features. We have two different types of home equity loans. We have a home equity loan is a lump sum. You receive the full amount at once. When you close on the loan, there's a 3-day rescission. You don't get your money immediately. You don't go home with a check. There's a 3-day rescission when you take out a home equity loan. And that's basically it's a law because you're using your house as collateral. They want to make sure that you understand that, and you have 3 days to change your mind. But once that rescission date is up, then you do get your funds. Most home equity fixed lump sum loans are fixed rate, and so you have the same payment over the whole term. And then, of course, as I mentioned, your home is collateral, which will offer you lower interest rates in most instances. A home equity line of credit, which we call HELOCs, that's essentially, it's a line of credit on your home. Instead of taking the full amount, you only take it as you need it. So you're only paying back what you need as you use it. A home equity loan, HELOC, is a loan that allows you to borrow, spend, and repay as you go using the home as collateral. Next. HELOC features: flexible access, borrow as need during the draw period. The rates are 9, at least with ours, but I've never seen a HELOC that was fixed. But generally they're all variable rates. So the rate's going to be based on whatever the financial institutions whatever index they use, and we use prime rate or Wall Street prime. Practical uses of home equity loans. Okay, home improvements, finance renovations, which can increase the property's value and enhance your living space. Debt consolidation, paying off high interest debt by consolidating multiple debts into a single lower payment. And funding, I'm having trouble seeing the slide, but basically life events, college, perhaps a wedding, just sometimes medical expenses, but just, life events. Next page. Practical uses of home improvements. Okay, and this is where we get into where the home improvements can add value. A kitchen remodel, bathroom upgrade, and energy efficient improvements. Also, adding on rooms, doing extensions to the house. Those are usually the four that will typically increase the value of your home. But a lot of it too depends on the quality and style of the renovation that you do, and also market. Just to give you an example, if you live in a development that's colonial, and you have a colonial home and you add an extension and the extension is contemporary, that might not give you back the the equity or the increase that you'd think, because it's non-conforming, which means it's not typically what the other houses are in that neighborhood. But I won't get into the weeds in that, but just these are the basic 3 and 4 that usually will add value to your home. Next improvement. Next slide, excuse me. Debt consolidation. Okay, usually you can save some interest because credit cards, the rates are usually higher. So are most secured loans. I mean, unsecured loans where you're not offering collateral, they're going to be a little bit higher. Also too, with debt consolidation, you are spreading out the payments over a higher term. So it may help you your monthly output. It could help on that, but you do need to be careful with that consolidation because you have good intentions. You're going to pay things off and have a smaller monthly output, but a lot of times you can get back into that a situation where you use the credit cards again. So you just want to be careful with that. Next, funding major life events. Okay, college tuition, medical expenses, special events, of course, like a wedding, emergency funds, have a financial cushion for unforeseen emergencies. And next. Okay, I'm going to go ahead and hand it off to Elton because we do have several options if you don't want to actually use your house as collateral, or if that just may not be an option for you. So Elton.
Yes, thank you for the first part of the presentation. So we're going to be talking about options when your home equity is not available, or you may not be a homeowner, and home equity options are not for you. So we have multiple ways that we can assist our members. We have personal loans, we have credit cards, as well as we have personal lines of credit. And these all we're going to delve deeper as we move forward. So with the personal loans, this is an excellent option when you are needing a lump sum of money to cover personal expenses. These are installment loans, so these are closed-end loans as we call them, with a fixed monthly amount that you pay every month. It has a fixed interest rate, as well as the funds can cover debt consolidation. It can cover medical bills. It can cover home improvements. It can even cover a vacation. If you haven't been on vacation in 10 years and your family says, okay, we haven't been on vacation in 10 years, and it could help to supplement some of that as well if you've saved up for most of it and just need the difference for it. Ultimately, personal loans, they are for funding unexpected life events, because typically you can get access to this type of funds more quickly than you can if you were to do a home equity line of credit or a fixed home equity loan. So you could use it right around the corner right now. We're entering the fall season. Weatherization is a great way to use a personal loan. I just want to share with you some statistics based on what the costs are to weatherize your home, and it can be inexpensive, but there are some things that can be expensive. So if you don't have the funds, then this will be a great option. If you want to seal your air ducts, tune up your heat pump, um, do upgrades to a heat pump or central AC, install thermostats, duct sealing. These five options I share with you range from $80 to $2,000, with the duct sealing being the most expensive, averaging between 1,500 to 2,000. The duct insulation on the heat pump, that ranges between 800 to 2,000. And also probably something that is not always thought of by homeowners is the attic the wall, the basement wall, and the crawl space insulation. That can help you from both, not just the winter weather, but also from the summer weather as well. That ranges between 500 to 3,700, depending on how much you're doing in terms of insulation. If you're just doing the attic or you're doing all of the things that I mentioned. And then also too, the cost of replacing a water heater is expensive now. It's not, you could, it's not like, you go and get a $500 one. Now they've added newer technology to the water heater. Who would have thought? And now you could do one with a heat pump heater with it, and that ranges between 1,500 to 3,000. Unexpected medical expenses. This could be for your family. This also could be for your pets as well. The major events, this could be for wedding, anniversaries. If you have a milestone anniversary, that's like a great way to use this personal loan for, and also contract home improvements. And then we'll go further into that. And then funding your vacation, summer and winter holiday travels. We're getting into the holiday travel season. Thanksgiving is right around our corner. Christmas, New Year's around the corner as well. So I know this is a great time. Everybody wants to see family. And then ultimately, emergency funds. This could be from that unexpected car repair that you didn't anticipate having, natural disasters, funeral expenses, summer camps for your children, and also, as I said, replacing that water heater, because when the water heater busts, it busts. Like it doesn't tell you, hey, today I'm gonna leak. So it's always good to be preventative with that, and replace them as quickly as you can. So personal loans and home improvement loans. These are all unsecured loans. They have a fixed loan amount, they have fixed interest rates, and they're flexible. Uh, with our personal loans and home improvement unsecured loans, there's no collateral that's required. So you don't have to use your home or car to secure this loan, which makes it more accessible to consumers who may not have equity in their home or a free and clear title to use for their vehicle. And then with our fixed loan amounts, our personal loans, we can go up to 70,000 with the loan term up to 84 months. And for home improvement unsecured loans, we go up to 125,000, but it does require a signed contract and with loan terms up to 180 months. And then you would receive those funds upfront, and we would deposit them into your account or mail them to a creditor if you're doing a debt consolidation at your choosing. And then also too, you know, you have the flexibility to use this for many uses, and it's not restricted most of the time. All right, credit cards. Like this is the next topic that we're going to be going over. So with our credit cards, they can assist members to build credit. If you're just starting out, this is a good way to start building credit. Also, we offer a rewards credit card option. So if you use your credit card, you could pay it off at the end with each statement that you receive, and you can earn rewards points to redeem for cashback miles on and other purchases, as well as you get the convenience that the limit is available to you. And then also it can protect you against fraud because you're using a card that's not tied to your checking account. So if there is any compromised activity on your card, it's tied to the credit card, and you can easily dispute those charges without tying up any of your checking account balances as well. And this is just a great, you know, way to use a service to manage your finances responsibly as well. All right. So we're going to delve into our lines of credit. So these are personal lines of credit, and you can borrow. So it's a revolving line, so you can borrow and pay it back, borrow and pay it back. So it will remain open and active as long as you have it open with USN and you remain a member with us. And you can use our line of credit for ongoing expenses. You know, these can be variable costs such as unexpected home improvements, childcare expenses, and it gives you the flexibility to borrow without having to take out multiple loan applications. Because once you have your line of credit, you can tap into it at any time as long as you have the availability on your account, on your car, on your account. Also, too, you know, it's a great way to give you that safety net for emergency funds. You know, we hear many financial experts indicate that we need to save 3 to 6 months for emergencies, and we all have been the last 4 years with the way inflation is. It's been kind of hard to save up 3 to 6 months, and more than 60 to 65% of consumers cannot afford to pay a $1,000 unexpected emergency. So this would be a good way to prevent from having to figure out how you're going to cover it. All right, and then choosing the best financing option. When it comes to selecting financing options, it's important that you take a comprehensive approach And so you want to look at assessing your financial situation. So you start by understanding your current financial health, which includes your income, your expenses, and your existing debt. This will help determine how much you can afford and borrow and repay back. Comparing the different types of loans. So you will explore various loan options, whether it's a home equity loan, a personal loan, or line of credit, to see which one aligns best with your needs. And also, you can have to also consider the interest rates and the terms, because it's going to have to be what's important to you as well. Pay close attention to the interest rate and the repayment terms that each of the loan types have, and factor those in to significantly how they're going to significantly impact your monthly payment and the overall cost of your borrowing. With the revolving lines of credit, whether it's your home equity line of credit, a credit card, or a personal line of credit, those are you only pay on what you borrow. So you can have a $25,000 limit as an example, but if you only borrow 5,000, then you're only paying interest on that 5,000. You're not paying interest on the whole 25,000 until you utilize the entire limit. And you could factor in, if I borrow $5,000, if I want to pay it off in 12 months, what is my payment going to be like to ensure that I pay it off in 12 months based on the current interest rates that the revolving lines have. And also too, don't forget the costs and the fees that are associated with obtaining any loan, such as origination fees or prepayment penalties. This can affect the overall cost of your loan. With the consumer loan side of it, we do not have any, and the home equity as well too. We do not have any prepayment penalties, and we do not have origination fees either. And then think about your financial goals. So think about how each loan is going to fit into your broader financial goals. Are you looking to pay off your debt quickly? Are you trying to finance a major purchase? Or are you wanting to invest in home improvements? Your objectives are going to guide your choice and decisions as to which way you go. And then some of the factors to consider before making a decision. Number one is going to be the interest rate. Understanding the cost of borrowing is highly crucial. High interest rates mean higher overall costs. So choose a loan with a rate that you can comfortably manage. Right now, the interest rates are elevated because of the Federal Reserve deemed that the economy had too much inflation, so they quickly raised the interest rates, which affected not just home equities, but they affected credit card interest rates. They affected personal loan interest rate. It affected auto loan interest rates. It affected anything that had an interest rate was going up. So that ultimately increased the costs for consumers as they're borrowing. Loan terms, consider the repayment period, and do you want a shorter term, which means there's going to be a higher loan payment amount, but also it's going to be less interest that you're paying. With a perfect example is if you have a monthly payment, but you want to pay it off quickly, then you might want to do a biweekly payment option. So you're applying 2 extra payments to reduce the overall cost of the interest, as well as reducing your overall loan terms. And then be aware of any fees that are associated with loans, such as closing costs or penalties for early repayment, because this can add up and affect the total cost of your loan. And then also risk tolerance. How comfortable are you with getting this debt? Do you want to use your home as collateral? Are you willing to take, the potential benefits over the risk? The potential benefits would be higher appreciation of your home with any home improvements that you're making. Well, the risk associated with that is you're going to have a payment, to be able to pay back. So figure out, is your ROI, the return on your investment, going to outweigh the cost of putting into this investment? And why choose USSFCU? As a credit union, we work for you, our members. Our goal is to have lower fees and lower interest rates and compared to other financial institutions. So we have competitive interest rates, and which means that lower rates turn into lower monthly payments and less interest that you pay over time, that you can use to pay other debt, or you can just save in your account. And we have transparent and minimal fees. So we believe in disclosing upfront what the fees would be associated with the home equity. There's no surprises. We have no origination fees, and there's no prepayment penalties with USSFCU. So you could you can obtain a loan tomorrow. You can pay it off in 1 week. No questions asked. No one's gonna say, why are you paying this early? We just did this loan. That is your prerogative as a member to see what's best, for your financial needs. And then with our home equities, we have affordable closing costs. We work hard to keep these costs low so that more money goes towards your goals and not fees. And we do not have any annual fees. Our credit cards, our personal lines of credit, they do not have any annual fees that are associated. So that means you can rest assured that you're taking advantage of our benefits versus having to worry about any annual fees that other cards charge. And then here's a comparison of what our interest rates are versus what the industry average, according to Bankrate and LendingTree. The home equity rates are showing almost 1.4% difference lower with us versus the industry average. Our home equity line of credit, it's currently at prime. There are financial institutions that charge over prime. They call it prime plus. And with our personal loan rates, we have very competitive personal loan rates compared to what our other financial institutions are doing. The same thing with our credit card. Our credit card is very competitive with no annual fees. Plus, our rate is 13.5 for our lowest offering on the credit card. On our smart rate, and then our smart rewards is at 14.5% compared to almost 25% for other cards out there. And then our personal line of credit, currently it's at 15%, but it cannot exceed 18%. So if the Fed were to increase interest rates further, then it would not increase past the 18. Whereas PNC Bank, that we were able to find information, averages between 16.25% to 22.5%. Right. So now that we've provided you all of the information to make the most informed decision, you can certainly apply online at my.ussfcu.org, uh, over the phone at 800-374-2758, or you can visit our physical branch locations to further ask additional questions. Feel free to reach out to us. Both the home equity loan team and the consumer loan team have a dedicated phone queue that you can speak to live, uh, uh, highly qualified loan officers that can assist you with any questions that you may have. You don't have to apply to Qualys. If you have just general questions, we can answer those general questions for you as well. And then this is just our disclosures page regarding our home equities. Okay, so I'm going to open it up to questions.
Elton, thank you very much, and Kelly as well. Thank you very much for this presentation. Thank you for all the information that you gave us. And, as you can see, you, the member or potential member that you're watching this, as you can see, there's many options for you. All you need to do is contact us, whether it's in person or the phone or by email or whatever you will feel comfortable with. But, just let us know what your goal is. What do you want to accomplish? And as Elton was saying, we got great, representatives that are ready to answer all of the questions that you may have. So please make sure that you let us know what your goal is. And best believe that the United States Senate Federal Credit Union has a solution for you. So I also gave a shout out earlier, but I wanted to give another shout out to one of our attendees. She told me that she was attending our weekly Wednesday webinars, and she's one of us. She's part of the IRA department. So Madison, thank you very much for being here with us. I saw your name. I never confuse your last name, so I knew it was you. So thank you very much for being here with us and supporting us. With that being said, once again, thank you very much, Kelly and Elton. As you can see, if you want to take, a home equity loan from your house, you have some equity and you want to use that, you're more than welcome to do that. And if you want to do some, consumer loans as well, we have those solutions for you. Andrea, do you see any questions on your end?
Yes, I do. So the first question is, how does USFCU's interest rates compare with other FCUs, or are they mostly comparable across the nonprofit sector?
So we do a weekly review of what the market is doing out there. And that goes to both what the credit unions are doing as well as what the banks are doing. And we are very competitive in that, in that space. So, we are here to help our members, and like the interest rates that we offer, we are doing the best that we can to give you the best interest rates. Are there some that will be lower? Of course. But overall, I believe we give value to our members, and that's why we are able to have this presentation and be confident that we can assist them from X to Z.
The other thing I wanted to add to that with competitive rates with home equity loans, you have to really look at the disclosures, because another institution may have a lower rate, but their costs may be higher. So you have to really look at the whole picture and do the math. And if someone else is offering something lower, no, with mortgages, we don't match rates, but give us a call and we can tell you what your costs are going to be to close the loan, and you might be surprised. But we are, as Elton said, we're pretty competitive, if not lower with a lot of institutions, especially credit unions in this area.
And
One of the
to-
things, so I'm sorry, Eddie, you want to go?
No, go ahead, Mo.
Okay, sorry about that. And one of the things that I wanted to piggyback on what Kelly was saying, and it's actually me speaking from experience, it's that, and especially when it comes to the subject of home equity, mortgages, home equity related, they're about very similar when it comes to when you're in the market and when you're shopping around, and oftentimes you might get carried away and talk to a financial institution that's going to offer you a much lower interest rate. But on the back end, when you start seeing all of the fees that are starting adding up, is that really worth it? There's one thing that for sure you definitely want to pay a lot of close attention, as Kitty alluded to. Look at the fine print, especially for those fees, because when you're talking about a loan, if you're doing a mortgage loan for 30 years, or if you're doing a home equity for 20, those fees that you're paying for upfront is going to add up, regardless of the interest rate that you're paying. So you do need to be very careful. And one thing for sure that I can speak with a lot of confidence is that the fees that you pay when those type of fees that you pay with us here at the credit union are going to be much lower than what you see out there with the competition, even though they're offering you a lower rate. But is it going to really going to be a deal breaker for you? Again, it's all about doing your research, comparing the numbers, and look at the total cost of the loan. How much are you going to pay for the total loan, with one company versus the other one, regardless if the interest rate that they're giving you, it's going to be lower than the one we might offer you here at the credit union. I was wondering also, guys, is it possible to put the rate back, the slide with the rates that shows a comparison? I'm not sure if that's a possibility. But one of the things that I definitely wanted to highlight is that, if you look at that, we are extremely competitive, especially when you start thinking about those regular loans that, as Elton alluded to, credit cards, personal loans, personal line of credits. The interest rate that we offer, it's going to be very competitive, and especially credit cards. I know a lot of people sometimes, again, they get carried away by getting a credit card with 0% interest rate for 6 months, 9 months, 12, depending on whatever promo. But guess what happens once the promotion it's done? You're going to be paying, you're going to be in the 24. I'm actually seeing now rates starting in the high 20s, like 29%, almost 30. And that is a huge interest rate that you will be paying. And get this one, a lot of credit card companies nowadays, what they'll do is that if for some reason, even if it's by an accident, if you miss a payment, they will penalize you, and they will get rid of your promotional rate. They will take away the rate the 0% interest rate that you have, and on top of that, penalize you by adding an additional fee to the interest rate that you were going to be getting after the promotion was over. So again, a lot of things you want to take a look at. And one thing, I'm not sure if Elton mentioned it, but the most that you can pay in an interest rate here with any of our credit cards or any of our loans is going to be 18%. So that's the ceiling, that's the cap that we have as a credit union. So again, very important information that everyone should consider, when you're shopping around and thinking about getting a loan.
Right, so the next question is, do you have a certain amount, a certain amount limit in your account to apply for any of the products?
No. You just have to have, your membership share. The only loan that you would have to have money in your account would be a share secured loan.
Thank you so much. And can you get a home equity loan if your home is with a traditional bank? Clarification, if your mortgage is with a traditional bank.
Yes. Yeah. We do it every day. If you have your first mortgage, for example, with Wells Fargo, yeah, it does, that wouldn't matter because we would be in second position, but that shouldn't be a problem.
And I believe this.
That's
Mhm.
I'm sorry, I was just gonna add that's a great point. A lot of people oftentimes, they can they either they can get intimidated or they can get a little carried away. Oftentimes, the lender that you're talking to, they might guide you towards them instead of you exploring and really shopping around and talking about the rates that the credit unions have to offer. And again, most important here as at the United States Senate Federal Credit Union. One thing also that I want to add as well too is that you don't have to live in DC in order to think about getting a mortgage or a home equity or any personal loan, any lending product actually. We are in all of the 50 states, so anyone that is interested, reach out to us. We'll be more than happy to assist you. We'll be more than happy to walk you through. And as Elton alluded to, we have a dedicated team, a dedicated a line whenever you call the 1-800 number. If you press that option, there will be somebody that you will be able to talk live. And then all of our employees here that have so much knowledge, so much experience, and then they will be able to answer your questions. So there's no commitment. You don't have to commit to anything. Just give us a call, and we'll be happy to answer any of your questions, regardless of where you are. So if you know anyone that is interested, tell them to give us a try. We'll be more than happy to provide them with all the details, all the information, and what's pertaining to the process, regardless of the type of product that you're interested. And another thing too, and maybe Elton, you might want to touch a little bit more, because oftentimes I know people they get concerned because they think that the only thing most lenders look is just credit. Can you elaborate a little more when it comes to what are some of the guidelines when if somebody's interested in getting a loan? Is it credit the only thing that we're looking at, Elton?
That is a great question. Your credit score ultimately just determines what your interest rate is going to be. Your credit score does not determine whether you'll be going to be getting the loan. Credit history is important. Whether you have comparable experience for what you're requesting. We do look at your employment history, how long you've been working. Are you a job hopper, who stays at the job only 3 months, or are you in a stable industry, or you could have worked somewhere for 20 years, but you just recently changed jobs. That's a different scenario versus somebody who is who worked at Starbucks for 3 months and then went to the federal government for 3 months and then went back to McDonald's for 3 months. So in those respects, your debt to income, how much income is coming in versus your monthly expenses that are showing on the credit report. One thing that people also don't think about is if you're borrowing against your 401k, your 403b, your 457, I think it's called. If you're borrowing against your retirement account, and that shows up on your pay stubs, that is considered debt. So we have to factor those into your debt to income ratio. So that could affect whether we're able to do this or not do this, depending on where you are. Your monthly cash flow plays a part. Can you support this additional debt as well? Previous credit history. If you've had prior derogatory payment history, but you've been showing positive repayment, like those are all factored in. If you had prior collections or charge-offs or whatnot, and those are settled, or you've paid on them, or you're paying on them, we look at all of we look at those. Again, like our goal, as I've said in a previous webinar, is to look at the holistic view of the application. The credit score just determines your rate, and then we will look at how we can make the loan for our member. Sometimes we have to restructure it in a way that is going to work for both sides, because at the end of the day, you're coming to us as a member, and then especially with unsecured loans, that poses the most risk to any financial institution, not just the U.S. Senate. So those are looked at a bit more closely, versus when you have a auto loan or home equity loan, we'll still review the application in totality, but there's collateral that will be able to support that loan in the event that something happens and you're not able, to pay that back. So high risk unsecured, lower risk secured. So that's how we review those things too.
I wanted to add something just with mortgages, with home equity loans, if you either fixed or line of credit, we cannot do them currently in Texas or Hawaii, Alaska, and U.S. territories. So I just wanted to point that out. Thank you.
All right, we have 2 more questions. So I'm gonna go and read one of the questions. It says, your credit card rates are incredible. I always get notices for credit cards and I always get notices from other credit cards and they're high. I don't currently have a credit card and I know that I need at least one. Is there a certain criteria needed for a credit card?
As I just explained, we review the application in totality. There is no certain criteria. We don't have a checkbox. We're not we review the applications live. A human reviews it. It's not reviewed by AI. It's not reviewed by a bot. But we look at things objectively. We remove the emotion out of a decision, because we have to, by law, we have to give everybody the same fair treatment, of fair, same review. So we don't have, one will get something and one won't, if they're the same comparable. So, we'll be more than happy to, to speak with you if you want to call us and just get some more information about our credit cards. Or if you're ready, you can simply apply online, and one of our loan officers, will be able to, to assist you. And one thing that I want to say is, we give the member to select what credit card limit they would like to request, but credit card limits are based and assigned on experience. They're assigned on if you have too much open credit, that can also affect what credit limit you're going to be assigned as well. So if you have $200,000 in open credit, and you're asking for a $50,000 credit card, we look at a lot of things to determine. So I can't just speak specifically, to your question, because we have to take credit application to be able to give you a decision.
And to Elton's point, and to emphasize what he was saying that it's not AI, reviewing these applications or approving the loans. So just because you heard from somebody like, oh, they didn't give me this loan and I have this credit score, and you might have the same credit score, just call us, because every scenario is different. Like Elton was saying, contact us, let us know what your scenario is, what your goal is, and we'll be able to work something out for you. So it's not AI approving this applications, it's ER, Elton Rashi. That's what your application. And then talking about credit cards, Elton, there is never an annual fee with your credit cards, correct?
We do not have an annual fee.
Perfect.
With their credit cards.
And then another question is very relevant, and I really like this question, and many people might have these questions in their mind. So thank you very much for the person that asked this. But what is the difference between the equity loan and the line of credit?
Okay, well, we call home equity loans. They're all home equity loans because you're taking equity out of your home. But just for terminology, we call home equity loans. There are fixed terms that you get all the money at once. A line of credit we call a HELOC. And that's a home equity line of credit. And that is essentially like a credit card in a sense. You don't get a credit card, but it's a line of credit. You might have a line of credit. We have we have lines of credit on your checking accounts so you don't overdraw. But of course, you don't want to do that with your house. We don't want to say you're overdrawing your house, but yeah, it's a line of credit on your house. So you take the funds out as you need it, you disperse them, and then you're only paying back what you actually use. So if you have a $50,000 line of credit and you've only used 25,000, you're paying back 25,000 plus the interest. You're not paying 50. Now when you go to closing, there are some fees involved, and some of the fees are based on the loan amount. For example, municipalities, their recording costs. They pay, there's costs to record the loan in the county that you live in. And also some counties charge an additional tax. So that is based on the line of credit. It is not based on what you take out. So just keep that in mind.
You heard from the expert. Kelly can tell you, we used to work together back in the days with this home equity loans. And if you have any questions, she will be the person that you definitely want to ask because she has so much knowledge. So thank you, Kelly, for, letting us know what the difference is, because sometimes we hear the terminology. And like I always tell my members, before you sign the loan, whether it's a personal loan, HELOC, line of credit, home equity loan, whatever it is, just ask the questions, because we're here to answer you. Because once the signature is on paper, it's hard to, change the loan. It's already set in stone. But if you ask the questions before you sign, I just want to make sure that every member is, confident when they're signing that. Well, it's not a paper, it's DocuSign, it's electronic now, but you get the idea. So, once again, thank you very much, Kelly, Elton, Sharon, Angie, everybody that was here from, the lending department. We really appreciate you. And then Milton, I was going to give you the last regards.
Yeah, no, thank you, sir. No, I was just going to say that there's actually, remember, a commitment, answer every question before we go. So
More questions.
2 more questions. Okay, go ahead, Andrea.
Can you give an example of those fees?
For closing cost?
For a 5K line of credit, but the fees and tax can run you.
Well, 5,000, the minimum loan amount for a home equity loan is 7,500.
It's actually 50,000, Kelly.
Okay, I'm sorry. I thought you were talking about a home equity loan, the minimum loan amount.
No, I'm sorry.
Understand the question?
The amount is, I can give an example of the fees. For example, 50,000 line of credit.
Oh, okay. I thought she said 5. Okay.
No.
Okay, I understand. I can tell you what the fees are now. I mean, what the dollar amounts get a little tricky because it depends on the county and state you live in, and also whether or not we're going to need a full appraisal. In our disclosures, we, an estimate is usually 500 to 1,500. In some instances, they might be a little bit lower. I know Virginia, their fees are relatively low to record. In Maryland, the recordation taxes are expensive. Not to say and you finance it into the loan, although you have to be mindful of that. But it's hard for me to give you an exact amount. Now, if you want to call our office tomorrow, one of our loan processors can actually go in and maybe calculate it when they have all your information, where you live, that sort of thing. But the typical costs are the recording fee for where you live. There's a notary fee. If we have to order an appraisal, that you're probably talking on average about $500 if we need one. We don't always need one. If we just do an online value, they're called an AVM, and we can use it. And the reason that's like $15 or $20, but an online valuation is just an estimate based on it's not always accurate. So if you're looking for more money and we do an online and it's not there, then you would have to get an appraisal. Just because we have to gauge it by something, and that's what we do. We use an AVM. So it might cost you a little bit more if we need an appraisal. And if you do a loan for over 250,000, we would require a full appraisal. So like I said, usually it's under 1,500, but the higher the loan, the more it could be, and depending on your state. So hopefully that helps, but please feel free to call us tomorrow and we could probably give you more concise numbers or estimates.
Thank you, Kelly.
And the next question is, what's the difference? Oh, wait, we already answered that one, sorry. But it makes sense to even get a home equity loan or a line of credit if you're in the last 10 to 8 years of your 30 year.
We see it all the time. You just want to, you need to, it's really kind of up to you. How much risk you want to take with your house and, your retirement plans. But no, people, if you have 10 years left, well, you probably, if you took out a second or a home equity loan with us, you probably wouldn't want to go over 10 years. I mean, now people you can, you just really need to have somebody run the numbers for you, and we can help you with that. But yeah, it doesn't matter how much time you have left on your first.
Yeah. And one of the things that I'll also add to your answer, Kelly, is that know the why, right? Why would you want to dip into the equity? What are your plans? Are you looking to make upgrades, or perhaps if you're coming down to the last 10 years of your original 30-year mortgage loan, what is the plan? Are you thinking about retirement? Perhaps do you want to do some upgrades so that you can actually make the house value to go even higher? And therefore you use the equity to make those improvements. So again, there's a lot of questions that we will have, that we will ask you to make sure we have a clear picture and understanding as to why would you want to consider doing that option. But in terms of is there a time frame? Like how much time do you have to be in the house to consider doing a home equity? The answer to that is, as long as the equity is already there and then you have an actual plan as to what you want to, what's the purpose of those funds, then that will, that kind of, it will help us, help everyone guide, give you a much better, answer. And so again, give us a call. The number is right on the screen. The 1-800-374-2758. And there's the option that you'll be able to talk directly to a live person from a home equity or a lending department, and they will be more than happy to assist you there. And Andrea, I believe we have one last question, and then we're going to go ahead and wrap it up.
We have two more questions. Yeah, I live in Idaho. Do you do home equity loans and HELOCs out there?
I'm sorry, can you repeat it?
This person lives in Idaho. One of the members that are joining us tonight lives in Idaho, and they're wondering if we do home equity loans and HELOCs out there.
In Idaho, yes, we do.
And then the last question is, how quickly can I receive funds after being approved for a personal loan?
Yeah, so that can depend. Usually we could do it same day, uh, depending on how quickly you provide us any applicable documentation that we are requesting as part of the approval process.
I have a question, and you can tell me just to call you tomorrow, Kelly. But live in a condo? If I wanted a home equity loan, are there any special consideration? Like living in a condo, does that make it difficult? Does that make it less valuable?
Not for home equity loans. I mean, with First Trust, there are more restrictions because of Fannie Freddie guidelines. But on a second, as long as it's a true condo and not a co-op, we can probably do it. I don't really see. I can't think of any restrictions off the top of my head to actually do it. Now, of course, you know, it's subject to paperwork and clear title and that sort of thing. But just general question, do we do condos? Yes, we do.
Thank you, Kelly.
Awesome. Thank you. Well, thank you so much. And again, I believe that that was the last question that we had for this evening. Again, Elton, Kelly, Sharon, thank you all so much for supporting this, this and presenting this webinar for our members. A lot of valuable information. As always, we will be sending the copy of the presentation to all of the attendees and anyone that registered for to this presentation. But if for some reason, you know someone that might find this information useful, just know that we are actually gonna this webinar is being recorded, so we're gonna have it on our website and also on our YouTube channel, so you'll be able to find this webinar in the next few days. So again, thank you all so much. And before we let you go this evening, I do want to remind everyone that next week we have another interesting topic. Actually, this one, it's in line with what's happening right now. Everyone is back in school, college is in session. So for those parents that have either juniors or seniors that are going and attending high school right now, and you want to know how to plan, prepare, and pay for college, and you don't have a clear picture on how to do so, well then next webinar is going to be your main channel to give you a lot of insights, a lot of great information, and it's going to be all about how to prepare and pay for college, and it's going to be presented by an expert from Student Choice. So it would be an actual, somebody from there that will be presenting that webinar next week. So again, thank you all to the panel. As always, you guys do a wonderful job. Sorry that we kept you a little longer, but again, we truly appreciate it. So with that being said, we'll see you all next week. Thank you all again. Have a wonderful evening.